Good morning, I am Nicholas and today's hot topic is the sharp and brutal drop of the British pound. This week's Asian session opened with the pound receiving a plummeting of 200 pips. It was down to 140.55 all the way from 144. That's about 350 pips. In other words, it means that it also hit a 7-year low against the US dollar, making it by far the worst performing major currency during the trading session. So what spooked the cable traders? The hot topic in the UK right now is the upcoming referendum on whether it will stay in Europe or not, otherwise known as the Brexit. On Sunday, a key figure in British politics, Boris Johnson, which is also the mayor of London, along with a number of other politicians, came out in favour of leaving the EU. Investors responded immediately and sent the pound tumbling against its trading partners. By mid-morning, in the Asian session, the euro was up 0.6% against the pound, reaching an almost 13-month high. Let's take a quick look at what's driving talks of a Brexit. It's not a new debate. In fact, it's been hotly argued ever since the UK entered the European Community in 1973. Prime Minister David Cameron announced on Friday that the vote will take place on the 23rd of June. Mr. Cameron and a large number of politicians, along with a majority of business, are against leaving Europe. However, a recent poll showed that nearly half of the public are in favour of an exit. So what are the cons and the pros for the UK to stay in the EU? Those in favour of a Brexit argue that EU regulations are holding back small-medium enterprises in the UK, that by exiting the EU, Britain would regain much of its political sovereignty, especially over important policy relating to banking and immigration. Meanwhile, the cost of EU membership is 11% of the UK's GDP. On the flip side, those in favour of staying in the EU argue that free trade with Europe is saving billions of pounds, which outweigh any membership costs. And as a major financial hub, the free flow of workers would be seriously impeded if a Brexit emerges. As Europe represents 25% of global GDP, by exiting the EU, Britain's influence on global finance would be lessened, as well as making it a less attractive destination for foreign direct investment. We've got 4 months before the referendum will take place, and it looks like fears of a Brexit will be a major driving force behind the sterling. How do you think a Brexit will influence the pound? Comment below and let us know your thoughts. I'm Nicholas, and you have been watching The Hot Topic.